Here's a jaw-dropping fact: a single Ethereum whale just moved another $120 million in USDT to Binance, adding to their already staggering $1.33 billion stash. But what does this mean for the future of Ethereum? Is this a sign of a looming rally, or are we on the brink of a deeper correction? Let's dive into the details and uncover the story behind this massive move. Ethereum has been stuck in a tug-of-war, struggling to break past the $3,600 resistance level as broader market uncertainty keeps investors on edge. Despite multiple attempts, the asset remains range-bound, reflecting a cautious sentiment across the crypto space. But here's where it gets controversial: while short-term traders are playing defense, long-term investors, including institutional giants and crypto whales, are quietly accumulating ETH. Could this be the final shakeout before Ethereum's next big surge? On-chain data reveals a fascinating trend: large holders are steadily buying ETH, even amid persistent volatility. This influx of capital from big players suggests growing confidence in Ethereum's long-term potential, especially as network fundamentals remain robust and liquidity stabilizes. And this is the part most people miss: the disconnect between Ethereum's price weakness and whale accumulation mirrors patterns seen in previous cycles, where accumulation peaks near local lows just before a significant rebound. Take, for instance, the whale known as 66K ETH Borrow, who has been on a buying spree since early November, snapping up 385,718 ETH worth $1.33 billion. Their latest move? Borrowing $120 million in USDT from Aave and transferring it to Binance, a clear signal of intent to accumulate further. But is this a bold bet on Ethereum's future, or a risky gamble? By leveraging borrowed funds, this whale is doubling down on their position, anticipating a price rebound. However, if Ethereum fails to hold its current support levels, this strategy could backfire, triggering liquidations and amplifying market volatility. Ethereum's daily chart paints a picture of consolidation above the $3,450 to $3,500 zone, with bulls and bears locked in a stalemate. The 200-day moving average continues to act as a critical support level, while the 50-day moving average near $3,700 remains a hurdle. Here's the kicker: recent price action shows tighter ranges and declining volume, often a precursor to a breakout. For bulls to regain control, a decisive close above $3,650 is needed, which could pave the way for a rally toward $3,900 to $4,000. Conversely, a drop below $3,400 could send ETH tumbling toward $3,100, a key psychological support level. So, what's the takeaway? While Ethereum's short-term outlook remains uncertain, the persistent accumulation by smart money suggests that long-term investors are positioning for a potential recovery. But the question remains: are they onto something, or are they misreading the market? What's your take? Do you think Ethereum is poised for a breakout, or are we in for more sideways action? Let's spark a debate in the comments.